world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here.
Hello and welcome to Rebank. I'm your host, Will Beeson. Today we're thrilled to be joined by Anders Cour. Anders is the co-founder and CEO of Saxo Payments Banking Circle, a utility layer providing global transaction processing and payments to the banking industry. Many people talk about banks becoming a backend payment processing utility layer, and Anders is actively building a business to play that role. Anders is a lawyer by training and worked in M&A advisory and venture capital prior to starting Banking Circle. If you enjoyed today's episode, check out the entire back catalog at www.bankingthefuture.com. Thank you very much for joining us today. Please welcome Anders Cour. Anders, welcome to Rebank.
Thank you.
You are the CEO of Banking Circle. What's Banking Circle?
The Saxo Payments Banking Circle is one of the first businesses focused solely on becoming a financial utility. So we are, let's call it, the back-end infrastructure of a lot of businesses in the financial tech industry and banks.
Okay, so this is the idea of banks becoming that utility layer, the pipes that process payments that support a lot of front-end experiences, but without necessarily owning the entire stack.
Exactly.
Yeah.
It's spot on. We have on purpose chosen to be in that part of the value chain. The reason being that we think the combination of deregulation in the financial industry and digitization will create a separation of the value chain where you would have to choose whether you want to be close to the clients and focusing on delivering agile financial solutions, maintaining the client relationship, or you would focus on being part of the core infrastructure of the financial industry.
Yeah. No, well, that's great because you hear that thesis put forward from time to time, I suppose with increasing regularity. It's nice to meet someone who's actually building it into their business strategy. So that sounds pretty forward-looking. When did you set out to build Saxo Payments?
We set out to build Saxo Payments back in 2013, started up in January. But we didn't launch before January 16, primarily due to the reason that if you want to launch a financial infrastructure business, you need to make sure that everything is thoroughly tested. You need to make sure you have the security standards that you can meet, that the IT is in place. So we launched it in 2016 to the market, and has been growing tremendously since then. I think one of the key or the key philosophy behind what we do is actually that 200 years ago you might have your own small factory and you had your own power generator in the backyard. At some point people realized that it was easier just to plug in to an electricity provider somewhere and then focus on delivering whatever you would manufacture in your factory. It's exactly the same trend that we're seeing now, that anybody focusing on financial services should, given the competition and digitization, focus on that, and then we'll deal with the pipes and plumbing, and that's what we've done.
Yeah. So presumably it's a volume play, i.e. it works if you hit a critical mass of payment transactions. High level, what are the kind of the economics of it look like? How many payments transactions you need to be doing in order for it to be really viable?
You're spot on with this, and this is a scale game. And in 2 years, we've scaled from almost zero to $60 billion annualized volumes. The cross-border payments that we're running and the numbers of cross-border payments that we're running are double digits in millions per year, and that's of course a trend we'd hope would continue because you definitely need to do this in a large scale. Some of the things we are very conscious about is that the pricing you would need to have if you are a utility would have to be fairly low, and hence you also need the scale to make a decent business case of it.
And so our customers initially, I mean, is the idea, presumably it's not to target, purely small fintechs and people that would otherwise be accessing banks, or is it to look to effectively provide wholesale institutional grade transaction support to, I don't know, mid-tier banks?
I think in the beginning we started out providing solely payments to the fintech industry. The transition that we are in the middle of right now, and which has been the goal all the time, is to move into a position where we would be the preferred infrastructure provider also for mid-tier banks, and that we would not only sell payments and FX, but we would literally sell any given core banking service that a mid-tier bank or a good fintech would need to stay competitive in their own space.
Presumably you had the support of Saxo Bank as you guys were building the platform, but I imagine it must have been extremely complex to build the magnitude of technology, the complexity that you guys have put in place. What was that process like?
You're definitely right. It was a complex process. I think what we did was we had the privilege of being able to hire some very experienced IT people and bankers when we started up. They all were part of the investment in the company, so they also took some ownership. Then on top of that, obviously with Saxo Bank as a majority key stakeholder, we were able to leverage their knowledge. And then on top of that, we entered into a partnership with Oracle, where Oracle provided a lot of the core system, but obviously in a way where we scoped and implemented the setup to cater for exactly what we wanted it to do. So yes, it was a complex process. It was a funny process, and of course, when we went live with the first couple of clients, you felt like it was something like do or die at that point. Yeah. Luckily, it went well, so that's good.
You're a lawyer by training, you told me. So how did you become the CEO of a payments company?
It's interesting. I think many people that I know in this industry actually ended up here literally by coincidence, and it was something similar with me. I spent some time on the law firm that I worked on in Denmark, being part of a deal that created a Scandinavian card acquirer. Actually spent a lot of time on that. After that, I went to the US back in 2011, where fintech was just the term fintech was just evolving, and literally after having spent some time there, we decided to set up our own business. 8 months later, Saxo Bank came and asked whether we should work together, and we did that.
Okay, so it wasn't so much that Saxo Payments Banking Circle was born from within Saxo Bank, but more that they backed an early project that you were involved in and helped bring it to market?
Yeah, I think it's difficult to say whether it was one way or another, but definitely we met Saxo Bank during the business that we had. My current co-CEO, Lars Bertelsen, was the former head of corporate solutions in Saxo Bank, and I think we literally took some knowledge that we had from each side of the fence, and then pulled it together, and then Saxo Payments was born.
Mm-hmm. Now, I don't know how much you're interested in or able to talk about Saxo Bank specifically, especially given that you haven't necessarily worked there apart from their involvement with this company. But if my memory serves me correctly, Saxo Bank is a relatively new bank in the grand scheme of things, decades old, maybe.
It's right. It's founded in the 90s, and I think one of the reasons why it was such a good fit for us is that it does not have much legacy, especially not in the way in the mindset of the CEO and the executive management is very much an execution. So I think it had been difficult to see many other banks that would have been able or willing to move that fast as they did. I think from the day we discussed this the first time in early 2013, and until we entered into the partnership that created Saxo Payments, it was only 5 months, which is quite good to do that with a large bank, and that had not been possible without, I think, a management at Saxo Bank that had a vision and were able to move fast.
Yeah, well, it's not surprising for me to hear that Saxo Bank is kind of that forward-looking, responsive. I think they have a reputation as being willing to look at things in a different way than more traditional incumbent players have. I believe they also have basically a brokerage platform as a service, so offer a lot of the technology that they've built to support either trading and or wealth management, and they offer that as a white label service. This concept of platform as a service, and I think you kind of opened talking about the maybe rethinking of the value chain in banking, i.e. traditionally it's been banks seek to own everything from customer engagement on the front end to transaction processing on the back end. And actually now there are a lot of people coming to market, many people that we've actually connected with on the podcast in the past. Fedor comes to mind as someone who is delivering white label banking solutions to either corporates or fintechs or other banks as a way of supporting what they're doing. I'd be interested to get your thoughts. Maybe you can expand on that piece around the changing value chain model and breaking up value chain and the difference between customer ownership on the front end, utility on the back end, where you see economic value accruing over the long term, how you see things playing out.
I think it's a very good question because obviously we can't predict the future, but at least there are some trends that we can see. I think you've seen many of the newcomers in the market, especially in the UK with Revolut and Monzo and TransferWise, that are focusing very aggressively on customer acquisition within a specific space with some very lean technology. In my opinion, they should stay very focused on that and not really focusing on the backend side. Then you have SME banking side, which is also an interesting space with Saxo Bank and Starling Bank that is although hybrid still has its primary focus within the SME space. And I think then you have someone like us that is on purpose an infrastructure play. So we don't, as an example, take any corporate clients. We are focused solely on delivering the services to regulated entities. And I think that separation of the value chain will be even more clear over the next couple of years. I think you also see in the part of the value chain where they focus on keeping or maintaining the client relationship, you'd see many entities that would 15 years ago be classified as banks, but not necessarily with a banking license. So you could have Amazon providing some kind of lending, or you can have Facebook providing money remittance. So in that aspect of financial services would be much more diversified than it was 20 years ago.
You mentioned Amazon, and you mentioned some of these other trends in both banking and outside of banking. It's interesting to think that despite how global a lot of other industries have become through the advent of internet technology, connectivity, that banking is still very much country specific and obviously makes sense from a regulatory standpoint. But I mean, frankly, international payments, like why is it still so siloed, geography specific? Why isn't the payments piece, for instance, as globally distributed as Amazon supply chain, for instance?
Yeah, it's an interesting question, and it's actually one of the reasons that a business like the banking circle is here, because you have when you move into financial services, typically the way traditional correspondent banking has been done is that you need a correspondent bank in a different party to make sure you can clear funds with a central bank. And obviously you can have 1, 2, 3, or 100 correspondent banks, but in the event where the payment has to go through 4 or 5 different banks, then it will eventually end up being more expensive and take more time. And in that respect, it's all about politics, compliance, and technology legacy. So you can have different clearinghouses in different countries with different file formats. You can have different regulatory frameworks in different countries, and even countries where you have politically decided to put some restrictions on your currency. And all that makes it an extremely complex landscape to navigate in, and that only adds on to the paradox that digitization creates a very smooth user experience cross-border, but behind the scenes it's still fairly complex and not in any way harmonized. And that's one of the things that the banking circle is trying to do as lean as possible.
Yeah, it's presumably part of, I would imagine, part of your value proposition to fintechs and as you grow to mid-tier banks is simplifying the payments piece. So if they're going to outsource that to a utility provider, presumably it isn't intended to include dozens of different file formats and all sorts of different compliance and regulatory for different geographies. Presumably you would want to simplify as much of that for them as possible and take ownership of that piece yourself.
That's correct. I think what we're
I guess that's where the legal background comes in handy.
Yeah, it is some kind of what you could call legal arbitrage, but I also think it's fair to say that we would. It's never the aim for us to be better in the UK than a very well-positioned UK bank. We'd never be better in Sweden than a well-positioned Swedish bank, and never be better in Germany than a well-positioned German bank. But we're as good as anyone in any given market, and that means you'd get quite a good experience by joining the banking circle, because you would get the relatively best experience in each country. I also think that many of both the fintechs and the mid-tier banks, they would still keep their core banking in their domestic country, because they can do that as well as anyone. But when it goes abroad, outside their domestic core, then it makes sense not to do it yourself.
We talked about the name banking circle. There's a suggestion of meaning. Maybe you can explain.
Yeah, I think the way what we're trying to do is to build a network of banks that can add to the infrastructural side. So let's assume today you would, as a mid-tier bank, you might have 3 or 4 correspondents that the payment has to go through for your corporate merchant to send a payment to Hong Kong. In our setup, you'd have one bank, and that would be us, and then we would have one member bank in that specific country. So it's a circle of banks that literally make 2 and 2 give 5. And that's why we've used the banking circle as a metaphor for the infrastructure that we're trying to build on a global scale.
What are your thoughts on the relevance in this space of some even crypto-based solutions? I think originally one of the concepts around Bitcoin was you can seamlessly send value from one place of the world to another with no problem, and then Ripple was a relatively fast follow-on from Bitcoin on the premise that basically a different approach to payment infrastructure could create a very efficient and fast way of sending and settling payments. I've spoken to a number of banks who've done trials with Ripple, and in some instances it is actually much better than traditional payment systems. In other instances, it sounds like it's either just as slow or as costly, if not more expensive than traditional payment mechanisms. Do you view something like Ripple, for instance, to be a one, interesting, and two, a part of a future of the payments infrastructure?
I think it's always interesting to follow new innovations, and Ripple has certainly done something right, because they're growing at a very fast rate. We have not we're not using it for now. We could do that in the future as a gateway. I think what is interesting with any of these new businesses, irrespective of whether it's Ripple or different gateway, is that I see them very much as technology gateways that could compete with Swift or could compete with an API. And in that respect, I definitely think we are about to see some change over the next period. It's very hard to predict what will work and what won't work. But I think you could. I think a business like Ripple could potentially be part of the banking circle as well over time. It's not now, but of course we're open for business for anyone. And in that respect, we're the platform, and we just implement the gateways that our clients would see a demand for.
You mentioned you guys are specifically focused on regulated businesses. Could you imagine an alternate business model similar to Banking Circle that were looking to support corporates or merchants directly, supporting those types of companies in effectively providing an end-to-end payment solution directly without the need for those players to go via banks, via correspondent banking by proxy and everything that goes along with that. Would you see an opportunity for someone in payments to innovate in that way?
I think in my opinion, you would either play the scale game or you would focus on your agility towards the merchants. And we're playing a scale game, and this means that for us to drive a decent business case, we need our clients to be regulated, because then they can push in a lot of volumes through our setup. If you play a setup where you had a, let's say, decentralized network that would approach merchants all over the world, it's hard to say whether that will work.
What if you partner with someone like Adyen or Stripe or something and did all their payment processing for them? They own the merchant relationships.
Yeah, but I think that's literally what we do. Not to comment on any specific clients, but we are the infrastructure of the payment gateways. So if you're a payment gateway, you can plug into us and you can literally do your settlement through us. But we would never go into doing the processing or the acquiring, because the day we did that, we would start competing with our own clients.
Yeah.
And that's why I see it's hard for me to imagine such a setup that you'd say. I'm not saying you wouldn't be able to do it, but you would create a channel conflict, which we would never do. We would rather make sure our clients, both those we have and future potential clients, would be in a very, very, very well positioned to compete for the end merchants.
And how do incumbent banks who maybe aren't actively embracing this move to utility viewing your model? Do you have conversations with them? Do you get feedback? Are you people throwing drinks on you at conferences and stuff because you're undercutting them on?
I think we're trying to provide value to the banks. So I think if you are a mid-tier bank, you typically have a hard time, given that you wouldn't maybe not be able to justify a business case that could enable you to get one of the larger tier 1 banks as a correspondent bank. While here you actually get access to a network, but on the other hand you also get the ability to become clearer of the flow from the banking circle in a specific country. So in addition to actually having the ability to service your clients via the network, you will also gain a business case, because other banks that would send flow through our system and need to pay out funds in a given country, that flow would then run through that specific bank that would be a member in said country.
Anders, what's the best way for people to connect with you and find out more about Banking Circle?
I think move into our website, send me a message on LinkedIn, or literally approach our sales team via the traditional channels, whether that's contact our office in Copenhagen, London, Luxembourg, or via LinkedIn or via our webpage. It doesn't really matter. We will definitely be responsive.
All right. Anders Lacour, thank you very much for joining us today.
Thank you.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.